David Bahnsen joins us this morning. David, when do we hit the bottom in this big tech sell-off? Any idea?
Ash, be very careful of anyone who dares to answer that question because it isn't easy to pick that exact bottom. And the problem is valuations were very high.
Yeah.
But now you not only have a valuation problem of getting prices recalibrated, the fundamentals are called into question. Certain business models are vulnerable. This could go on for a while, and there's a lot of froth in the big tech side. Let's not forget, some of that stuff was up triple, quadruple over the last few years.
What I don't understand, Dave, is, AI disruption, it's going to ripple through all these different industries. But we knew what AI was. What's different now than when everyone couldn't get enough of AI?
Well, I think there's two things going on. I'll go quick. I think that a lot of the hype about this AI disruption is people touting their own book. There are a lot of billionaires that love to predict the end of the world. Once they've achieved that, they're kind of insulated from the end of the world. They like to scare the rest of us with it. Look, there's excess, there's froth, and people don't know how some of the companies are going to make money. And so all of a sudden you go, wait a second, these stocks are up 500%, and I don't know what the future's like. It's a good time. That's what you see in the market, people going into energy, defensive sectors.
So is the AI concern overblown a little bit or not?
The AI investor concern is not overblown. That's the one I've been touting, that things are overpriced. As far as AI ruining
as a disruptor,
it's definitely going to be disruptive and transformative. There's investor issues, but as far as how it's going to affect our quality of life, I believe that we don't know how it's going to play out, but I don't believe the people touting this end of civilization stuff.
It's confusing because some tech CEOs say, look, we're going to work alongside AI, and then you have others that say this is a job replacer any way you look at it.
And the issue with job replacers is it fails to understand the nature of the human person. Human beings have unlimited needs and wants. There's unlimited opportunities in the job sector, but it's disruptive along the way. We've seen it with the digital revolution. We saw it with the industrial revolution.
This is just going to evolve more.
It's going to continue evolving, and it's going to surprise people as it evolves. So people making predictions right now, they need to be humble.
Big deal, David, or not really? What do you think?
They're kind of late in it, but they obviously have the biggest podcast player platform. But behind in video, YouTube, of course, is a major player in all of this. No, it's not a huge deal to the stock, but I mean, for consumers that take in this content, it could be a useful thing. Yeah,
you're right, though. It does seem that they're late to the game. But anyway, let's move on. General Mills, the cereal guys. David, you like General Mills because of the dividend.
Well,
right?
Well, you never like a company because of the dividend. The dividend comes because they're doing something that can generate the dividend.
Correct.
General Mills right now is trading at 9 times earnings. They are paying a 5.3% dividend yield. The yield is protected by cash flow. I don't think the GLP-1 thing has anything to do with it. The company needs to execute. Pepsi's up huge in the last couple months. All of the snack food consumer staples companies are the winners in the market so far.
So you're not worried about the consumer and cutting back?
No, I think that they have pricing power that they've had to adjust. Pepsi stock went up when they announced 15% cost reductions. General Mills has a pet food issue that has been a problem as well. They've turned that around. We believe that management has to execute, and you have a chance right now to buy a stock that isn't expensive. They will fix this story. Mark my word.
5% dividend. All
right,
David, thank you. Let's move on. Unilever announcing a 5-year partnership with Google. David, here we are again, AI.
Yeah, well, Google certainly has surprised a lot of people over the last 9 to 12 months. People thought that AI was going to hurt their SEO. Now it turns out it's a huge advantage. Gemini is right now the winner, absolutely trouncing OpenAI with a lot of things. And they're going to have a lot of corporate sponsorship, corporate strategic initiatives that they can do because they're already in the space, in phones, in hardware, in search, in all aspects of the internet. Google is positioned well in this moment.
Very good. Okay. Let's take a look at gold if we can. David, you're a gold bug?
No, I'm not.
No, you're not?
I have no prediction on what gold prices are going to do. If people believe that this volatility is a result of something with fiscal policy or monetary policy, I have a bridge to sell them. A lot of traders, a lot of speculators, a lot of up and down movements and no way to really price it. And we'll see. But it is not something anybody can tell you with a straight face where it's going in a week, a month, or even a year for that matter.
I'm not smiling. All right. Thank you, David. Similar story, though, for silver. What about that, David?
Silver is certainly more of an industrial metal than than gold. But no, silver did not go from 40 to 70 in a few minutes or, a few weeks because of AI demand. That was very technical. And again, there were a lot of shorts that were caught off sides. So it's still a trading commodity right now, not something that's trading off of fundamentals.
By the way, you have another dividend pick this morning. You liked a familiar name, UnitedHealth.
Well, I just love the idea. We have so many dividend growth names. The dividend growth space is up over 10% year to date when so much other stuff is getting hit. So I'm trying to pick those ones that are down a bit. General Mills was one. UnitedHealthcare was down. There was concern that the Medicare reimbursement's less than people were expecting, at least the way that the CMS is proposing it. Right. I think that's priced in the stock. I think you have a stock that has raised the dividend 25 years in a row through a lot of macroeconomic and political ups and downs. You saw that Buffett took a huge position in this last year. UnitedHealthcare right now looks very attractively
priced. What does
priced.
Buffett know?
Yeah, well, he's
pretty good, isn't he?
He's swung and missed a couple times. But this one is attractively priced, and you got a good dividend that's growing year over year.
David, thank you so much for being with us for the hour. A little extra in the paycheck this week.
Thank you.